Hola, muy buenas tardes a todos. Vamos a darle unos minutos a que se conecten los participantes, ¿va? Saludos.
Muy bien, saludos.
¿Qué son hot dogs? ¿Qué salchicha? Sí.
Hola, hola, ¿qué tal a todos?
Buenas tardes.
Hola, hola.
Muy buenas tardes. ¿Cómo les va? ¿Por ahí me escuchan? Buenísimo. Me da mucho gusto saludarlos. Mi nombre es Francisco Azcúnaga. Soy CEO de Powertrain Ventures. Somos un startup studio y aceleradora de impacto en Monterrey, Nuevo León. Estamos muy contentos de trabajar con startups de etapa de lanzamiento, de etapa presemilla, de etapa semilla, y de también apoyarlos a conectar con la etapa de venture. Y estamos encantados el día de hoy de recibirlos y en particular de recibir a los speakers que van a pitchar el día de hoy. eh, esta vez de manera invertida. Ahora van a ser los fondos quienes le presentan a los founders. Entonces, estamos muy agradecidos de contar con la participación de algunos de los fondos de Venture Capital más distinguidos el día de hoy en la llamada para trabajar de una manera organizada. Los invitamos a que eh, vayan guardando las preguntas que tengan, las pueden agregar al chat de parte de la audiencia. Al finalizar 6 minutos de pitch de cada presentación, vamos a tener un espacio de 3 o hasta 4 minutos de Q&A para que le hagan preguntas a la persona que acaba de presentar. Aparte, nos acompañan en el panel dos emprendedores con los que hemos tenido la oportunidad de colaborar, quienes van a estar desde su rol de founders que han levantado rondas de inversión, van a estar participando en el panel haciéndole preguntas a los inversionistas. Entonces me gustaría presentar primeramente a los inversionistas que formarán parte del panel. Oscar Rangel, bienvenido, Oscar.
Nada más que dijiste inversionistas, es de startup, ¿no? El founder.
Totalmente, totalmente. A los
Sí.
founders que formarán parte del panel de Q&A, Oscar, CEO de Movit. Oscar, ¿nos puedes dar una breve intro?
Claro, en español o en inglés, nada más la duda.
Vamos a brincar a inglés, ya que los
Ok.
pitches los buscamos hacer en inglés. So thank you for the reminder. All right.
All right.
Welcome, Oscar.
Thank you. Hello, everyone. I'm Oscar Rangel, co-founder and CEO at Movit, the logistical ecosystem for the supply chain. And we centralize logistics through our marketplace that serves as a one-stop solution for businesses clients seeking various logistics services from last mile deliveries to national freight. And we also have a software as a service that enables truck owners and small carriers to manage their fleet with compliance to new regulation and optimize asset utilization. Moreover, our certification programs allow us to become them movers, unlocking opportunities to serve smooth clientele and maximize their operational potential. Thanks to the Powertrain team, and I'm glad to be here.
Thank you, Oscar. We also have on the Q&A panel, Marco Sens from Help. Welcome, Marco.
Hi, everyone. Thank you for having me.
Could you give us a brief intro about Help?
Sure. Help is we call ourselves the OS or the operating system for the trade jobs in Latin America. When I talk about the operative system, is the platform where they can get a source of income, getting gigs, but also to standardize and do a better job in the field. It's funny because normally a lot of labels are in the industry, like, are you a prop tech? Are you a worker tech? Are you a con tech? Well, we are a bit of every of those industries, but moreover, we're a customer experience company. We're a startup that is focused on solving poor customer experience in the home improvement sector, meaning gigs for plumbers or electricians or painters and such. And our business model consists in teaming up with manufacturers and retailers in the industry. So we provide the one-stop shop for installation services of their products. So we're, in a way, are the after-sales component of these companies, and we try to make a better experience for the brands in the sector, so we can differentiate from the informal economy and other companies. So that's help in a nutshell, and I'm very glad to have the opportunity to see the very prestigious VCs that we have today. And I have never been in a reverse pitching, so this is gonna be interesting.
Thank you, Marco. Great. So now on to the main course. First off, I would like to just mention a couple of ideas out there, right, regarding the industry. One of the biggest ideas out there is that VC, especially in LATAM, is in a bit of a slump right now for the last couple of years. This is very much related to the peak that we saw, in 2021, for instance, regarding the number of investments, regarding the total capital raised, and so at this point, it seems that we're nearing an inflection point in which we're starting to see again an environment in which it becomes more economically attractive, as part of the economic cycle to fund innovation, right? And as there are, less attractive opportunities out there, such as fixed income instruments that, through managed economic policy, right? Some countries are starting to be in a position where they're, controlling or keeping tabs on inflation, and, slowly are going to be able to put those interest rates from their central banks, at ease a bit in LATAM. That's at least my expectation, and the same as I have been reading from some economists. And so I think that, VC is going to become a more attractive option for many investors, right? Not only the VCs, which are already in this business, but their respective, limited partners upstream in the financial chain. So I believe that, as VC becomes more of a mainstream asset, and private equity companies and portfolios are starting to, see the benefit of having this type of potentially high return investment in their portfolios, then, this is going to continue to become more of a mainstream type of investment activity, right? So this really opens up the board for many players, many new players. And so what I would like to invite the speakers tonight to share with us is a bit about how you guys are different from some other people, some other funds who can write the same check. What is it about you guys that makes your proposal, smarter money than the rest? And so with that, I would like to kick off the pitches. The first one that we have on the list is Ivan Montoya from New Mundo Ventures. Ivan, you ready?
I'm good to go. Let's
Great. Will you be sharing the screen?
yeah.
Okay. All right, go ahead.
All right, let's
We'll give you a heads up 1 minute before the 6 minutes are up, right? And then at the end of the Q&A.
sounds good. All
Great.
right. All right, so I'll share a little bit about what we're doing at New Mundo. We're a $5 million Silicon Valley-based pre-seed and seed fund. So we invest about $200,000 when we make a commitment to a company. I'm focused on Latin American and US-based fintech, proptech, and supply chain, but always with companies that are solving a problem in Latin America. The big difference, or at least what we believe about what we do, is we're very hands-on, super hands-on. We partner deeply with the founders and share with them, what we've learned after investing in over 40 companies in Latin America, but also provide access to the network that we have here, especially here in Silicon Valley in the US and LATAM. And we hope we do a good job of selecting founders to back. And in this fund, we're in the second year, and 4 of the first 7 investments have either raised a Series A or on track to raise it now. And I'll share a little bit more about our approach. So for those of you guys who don't know me, I've been an angel investing across all of Latin America for the last 5 years, very, very active across the whole ecosystem from Colombia to Chile to Mexico. I've been living in the Bay Area since 1995, so I've been here for almost 30 years, and started investing as an angel 5 years ago. I was both fortunate and lucky, and hopefully a little bit of skill in backing some companies that have done very well, and who've gotten financing from some big investors, both in Latin America as well as in the US. When I look at where startups are, right, at their different stages of growth, where we focus on is from pre-launch prior to Series A, right? And our focus is just in this segment, so that we know when we work with founders, exactly what it is that they're trying to achieve in this stage, and we're able to help them with our network and expertise on this stage. What we provide to founders, because a lot of people talk about partnering, I'm going to give you very specific things that we do and also an example. So one of the things that we do from the very beginning, we're sort of like the VC, the internal VC for the founder. So when we do an investment analysis, we build the investment memo with the founder. And whether we invest or not, this document and this effort helps those founders in capital raising, and hopefully helps them understand how a third party looks at their business. When we get involved, it's a very deep coaching and almost personal experience with the founders. We give them access to experts and our network very early, and I'll give you examples of that. And then at the end of the day, we help them raise capital, because at this stage, we're a small check relative to their ambitions. I'm going to go super fast on this, but for us, we like to back founders that are solving a huge problem that for their segments, it's a must-have. From the very beginning, from meeting 1, we talk about how to get to 100 million in revenue and try to understand that. I'm old school. I like to back companies that can make money. So it doesn't mean that they have to get to cash flow positive by Series A, but the option to get there is always a discussion that I have at the very beginning. There's a few traits that I look for in teams, and we just want to make this a fair evaluation, right? There's got to be risk reward for both parties. I'm going to skip the details on this. I don't know if we're going to share these pitch decks, but this is an example of a company called One Car Now that I met 2 years ago at Maidon. I was the first investor there, worked with him for 3 months before launch. And we've been on a 2-year journey. I actually met with Maidon yesterday. I worked with them for 3 months before I invested as an angel. I helped them close the vast majority of their capital in dollar terms came outside of Mexico. And in almost all those cases, I helped him close the lead investor. So for his pre-seed, it was a fund out of Chicago called New Stack. We invested again with the fund, helped him close the seed lead with Caraela Capital and Collide Capital, which is out of New York. Met with Brian today. Helped him close a $75 million debt facility that goes live next month. We invested again, helped him clean up his cap table as he was closing the Series A. And today he's at over 10 million in ARR. He's cash flow positive. It's likely that he'll be raising his Series B in about a year. We've invested so far in the fund in 6 other companies, 4 in Mexico, 1 in Venezuela, 1 in Chile. And part of the network, look, raising capital is a long-term relationship game, particularly as you get to Series B and beyond. And so one of the things that we do is we work with our founders and get them exposure to the Series B investors when they're in seed.
1 minute left.
And so this is an example of a call we had with Paolo Passoni from Valor Capital just a few weeks ago with some of our kind of credit-driven fintechs. And so that's it. Really interested in meeting with founders if they're in kind of our area of thesis, fintech, proptech, supply chain, they're pre-seed and seed, and you're open to really partnering with somebody who's going to support you for the long haul, but also will probably hopefully push and encourage founders to grow. So that's it.
Thank you, Ivan. That was great. Thanks a lot. And now over to the panel. Marco, Oscar, you guys have any questions?
Yeah. Well, it was a really good pitch. I like it. I would like to ask you, how do you navigate the risk related to the politics and the economic of Latam?
Yeah, it's a great question. What I would say to you kind of honestly, is that I focus much more on the micro. So are they in sectors where, regardless of the political administration, they're solving a problem that either side of the aisle cares about, right? So if you look at a company like Nubank, they were solving the problem of super expensive financial services in Brazil. They went through multiple administrations, and obviously there's risk. So I'm not saying that there isn't, but I try to focus on companies where, regardless of who's in charge, they're bringing value to either side, right?
All right.
Thank you, Ivan. Marco, you have a question, or anyone from the audience who wants to, pose the question themselves? Please raise your hands using the buttons on the Zoom call.
Yeah, just a quick question, because many of founders, Latin American founders, all have this in mind. If it's normally easier to make an investment round in the US than in Latin America, because normally we have had in the past a lack of capital in fundraising, and I'm meaning way back, not recently.
Yeah.
There is a lot of capital right now, but since the downfall that Francisco Paco was talking about from 2021 until today, the investment trend hasn't recovered. So how do you see this trend evolving in the next years?
There's no doubt it's hard to raise money. It's hard to be a founder. It's this very difficult journey that you guys are on, and I have tremendous respect. And so I'm not going to say anything different than it's difficult, right? I think that what's important, I think, is raising capital outside of Mexico, for example, right? The problem you're solving has to be so, put it this way, for somebody who doesn't live in Latin America, they've got to be able to hear a founder talk about the problem they're solving, and it has to be obvious. It has to hit them on the head, right? I backed I don't know if, Oscar, this is the reason you asked this question, but I've done 2 investments in Venezuela. One of them most recently is a company called Cachea. There's no consumer credit in Venezuela. If you have a Visa or MasterCard, you can only put $60 to $100 of credit on that. They introduced a buy now, pay later product. They've gone from 0 to 20 million in revenue in less than 2 years from launch. They're cash flow positive. And yeah, will it be easy for them to raise capital? Probably not, because they're from Venezuela. But anybody I talk to, it's obvious what problem they're solving, right? It's obvious what problem One Carnao is solving. So I think that's super important. And then the metrics have to be there. It's just harder, than it was. You can't just raise in the same way that you raised in the past.
Excellent. Thank you very much for your answer, and excellent presentation as well. Thank you.
Thank you. Thank you, Ivan. That was great. We really appreciate you taking part in our session today. Next up is Santiago Zavala, who is joining us from the Angel Hub Ventures team. Welcome, Santiago.
Yeah, it's
I'm sorry. I missed up. I mixed up
yeah. My
the
tocayo from 500, but
Exactly.
Santiago.
yeah, we have a couple of co-investments, so it's it's similar, but not the same. So
Welcome, Santiago.
yeah, thank you. You see my screen, right? Perfect. I'm gonna go a little bit quick because actually right now we are currently having an investment committee as of right now. And but for those who don't don't know us, we are Angel Hub. We are the most active angel investment club in Latin America. We were born in Monterrey, Mexico, but we invest all over Latin America and Spanish-speaking US markets also. As of today, we have around 180 angel investors, different profiles between owners of FEMAs or partners at different funds or even founders that already made an exit. They all add value to the investments we made all around Latin America. We are proud members of the Global Business Angel Network and also the Latin America Angel Network. So what do we invest in? We invest in startups. As I said, in LATAM, we are industry agnostic. We look for startups with high potential growth and a big market. Our ticket sizes are all the way from 25 all the way up to $250,000. Every angel at least needs to make a $5,000 check, but we need to get at least a pool of $25,000, and each angel decides individually which project they want to invest in. Even though there's a couple of angels entering the round, we invest through a vehicle, so every startup wouldn't have like all the angels. They would have just one vehicle, which is our vehicle, and that helps in the future, right? To clean the cap table. We operate by having monthly investment sessions. We present around 3 investments every month. Classic pitch and a question and answer. Then we have a next session with angels that are really interested in and having all the questions really answered, because we all know that in 20 minutes they're not gonna decide. So we do a further investigation. But we in 1 month, 1.5 months, if the times go well, we can invest, right? We do all this through a system. We have an unknown system where we present all the opportunities. Also for the angels, we do training. There's digital content for them to understand the asset classes. There's a lot of angels that invest but don't know exactly how to evaluate. So we help them, and we do all the administrative and legal support, all this boring stuff, that they don't want to do. We manage all of that, and we do all the communication, and of course the pipeline. We see around 1,200 startups a year, and we present 33 of them, between 30 and 40 every year to the investors. So the pipeline is already screened, and well, yeah. So that's angels like a lot about that. We invest in that. This is the model we use to evaluate startups. It's a different model between the best funds out there, but of course, because we invest mostly in early stage startups, the most important thing is a team. We see and we partner with founders, not with startups, and then we manage to maybe invest again, but it's the most important thing. We also do, of course, the business model, the market, the KPIs, and the finance, we see everything of that. But first of all, we want to see why is the founder the one that's going to solve this huge problem in the area, right? As of today, we have almost 60 startups, with 59 to be official. They raised almost $500 million in total. The valuation of all these 59 startups, it's $2.3 billion. We've invested in Mexico, United States, Colombia, Peru, and Chile also. The top industries that our angels like most, because they have invested more, is fintech, HR tech, logitech, proptech, and SaaS. And we have 35% of our startups are female-led, woman-led. So that's a great fact also. This is a little bit about our portfolio. In most of them, we entered super early. Be Directo, we were, I think, the first or second institutional investor.
1 more minute, Santiago.
Doing great right now. Nowports, of course, it's now a unicorn, and we entered somehow early. A lot about these startups. We entered early, and now we are. I'm gonna skip this, but we have allies in the ecosystem. We shared pipeline, and we add value to the startups, also having these connections with all of these allies we do have. A little bit of the news about our portfolios. For example, Vercor, first investor there, then they raised $2.5 million. Also, One Carnao, which Ivan also already talked about, we were one of the early investors there. Cuéntame also. So a lot of media and support that says that our founders have done great, and we have helped them in the process. So this is just about us. If you want to be a member of the club as an angel investor, or if you want to apply as a founder, there's two QR codes. And thank you. That's all.
Thank you, Santiago. Thanks, that was great. Questions from the audience? Do we have any questions from the audience before we turn it over to the panel? No?
Yes, I do have a question.
Hey, Rock,
What's up?
please go ahead.
Yeah, so what are the first two, not just the first, what are the first two things that you evaluate to make an investment? Which are the two most important qualities or features in a company?
Well, I mean, yeah, so I said, of course, the first one is going to be the founder. We invest in early stage startups. For example, Be Directo, when we invested, it was something not super different that they do today, but the founders were able to manage. It was pre-COVID. They delivered in offices, so of course they were hit by COVID, and they were gonna die, and they managed to pivot, and now they do almost $700,000 every. I mean, $7 million a year, so it's great. And also it's gonna be the market. If it's not a great market, even if you have everything about if you grow in the market, which is not big, it's not gonna be attractive for us. So I think the market is also gonna be the second one.
Thank you. Thank you, Roberto. Thank you, Santiago. We have a couple more questions from the audience. Please turn your camera on so we can see you when you're making these questions. Aquiles, welcome. And then last question for Santiago from Eduardo up next. Go ahead, Aquiles.
Hi, everyone. Santiago, it's going to sound like an attack from my part, but I just recently applied to your venture capital, and you sent me the feedback, and it was great. So I want to understand, I am an earlier stage startup, and you sent me this feedback that you would like to see more track in my startup. But right now I don't have any track. So as I told you, it's not an attack. I just want to
Yeah.
know what's your thesis about these early stage startups that doesn't have track records for you to be able to invest.
No, I mean, and it's a great question, and we're here to be honest, and this is the thing about this events, having straightforward conversations. So that's great. I mean, we do invest in early stage startups. It's hard for us, or better for the startups, because we see, as I said, 1,200 startups a year. So you have a lot of competition with, even though it's another industry or maybe another country, it's an opportunity for me or for the club to invest in. So it's if there's another startup in the same stage, but they have managed to deliver more traction without having a previous round, of course it's going to be sexier. It's going to be more attractive for the angels. So I mean, we have invested in pre-revenue startups. We have done it. Two of them of the 59, they have been zero revenue. It depends on a lot of factors. Maybe the founder had raised another startup with success, or maybe you have managed to have a pipeline with the, maybe the product, of course, is not going to be finished, but there's some things in the traction. It can be the pipeline. It can be just a proof of concept, but it's not a number. I'm not going to say like, if we don't invest in it, if it's not X number, but yet prove that you can manage or you can scale the product or the startup without capital, and with the capital is going to be 10x. It's going to be 10x bigger, right? So I think it's going to be more about that. If you want, we can talk more about it in private and with more time, and you can talk to me directly about your startup, because I don't see every startup. I just see like the ones that the principal sends me. So maybe we can get together and see further of what's your startup and yeah.
Thank you, Santiago. Thank you, Achilles. Eduardo, we have time for a quick question and quick answer. All right, one last one. Go ahead, Eduardo.
Thank you, Paco. Very quick question, Santiago. Which is the typical vehicle for the investment in this year, 2024, and which are the typical or the range of your valuation caps for those investments during this year, particularly, Santiago? Thank you.
Yeah, I mean the vehicle we use. I mean, we do have an LP in Canada, but that's our vehicle. The vehicle we do use for the startups is mostly safe. We feel safe with the safe. It's plain vanilla, simple. We don't like it. Valuations go all the way from 2.5 million down the bottom, all the way up to. We tend to see every time some startups are pre-series A, so maybe we can go up to a $20 million cap, or maybe more if it's, because we have almost 200 angel investors. Some of them like super pre-seed startups. Some of them like a little bit bigger valuations. So it's a big range, but from 2.5 to $20 million valuations depends on the stage that we're investing in.
Awesome. Thank you so much. I just send you a connection invite through LinkedIn to talk further.
Okay.
Thank you so much.
Perfect.
Thank you, Santiago. That was great. And please do share your contact information through the chat if you would like, for the rest of the audience to have access to it. Otherwise, we would be happy to connect you with all of the participants today. And next up is Otto Graf. Otto is partner and chief financial officer for Ignia. Welcome, Otto.
Hello, Francisco, and thanks for the invite, and hello, everyone. I do not have a presentation, so you're going to be stuck with my face, so I'm sorry about that. Regarding Ignea, we were the first venture capital fund based out of Mexico. We were founded in 2007 and raised our first fund in 2008. We have a little bit more than $400 million in assets under management. We have raised 3 main funds, one in 2008, one in 2016, and the last one in 2022. We have invested in 60 startups, all of them early stage. So our bread and butter is Series A, but we also have made investments in seed or pre-Series A type of companies, always in tech. We have not only raised our main funds, but also some sidecars and SPVs for the companies that we have already invested. So we invest obviously in Mexico, in Mexican founders, in Latin American founders from all over South America, Colombia, Chile, Uruguay, Argentina, Brazil, but also for founders in the US, Europe, and Israel. So we're agnostic to geography, but we invest in startups if and only if they plan to enter into the Mexican market or the Latin American market. So we want to be the partner of these type of companies that want to enter into Latin American region. We continue to be really optimistic in the prospects of Mexico as market for our startups and the rest of Latin America. So in most of the international companies that we invest in, we tend to be the only Latin American fund to be invested into these companies. Important thing that we do is that we reserve 60% of our fund, 60, for follow-on investments. So we tend to invest smaller tickets at the beginning because we know that we can be the best at doing due diligence of a company, but the only way to really understand how to work with the founders, to really know if the product that they're selling and if the founders themselves are going to be able to really grow a lot, is by investing firsthand. So we invest smaller tickets, 500,000, 1 million, up to 2 million in our first tickets, and then double down or triple down in the following round. So we need to have that dry powder in our fund in order to go into the following rounds. And we always like to co-invest with other investors. We have the capacity to feel around for a company. We prefer to invest less and bring co-investors with us who also have the capacity to co-invest with us in later rounds, because we know it's a reality that there's a funding gap for Latin American companies. So it's important for us to have a strong cap table from the very beginning of the moments that we start investing. And regarding sectors, we are agnostic to sectors, but we always invest in tech companies, in digital companies, mostly in software-related endeavors. We do not invest in tech related to hardware because of the intensity of capital needs of those type of companies. So obviously, we have invested heavily into fintech. We have invested heavily into e-commerce, into SaaS type of companies. And I believe that's it. You are not going to need to call me out because I'm running out of time, Francisco. So I open up for questions.
You have spare time.
Yeah.
Great. So who would like to, shoot the first question? Is this coming from the panel or from the audience? Great. Oscar, go ahead.
Thanks, Sato, for your pitch. I'd like to ask you, what is your secret sauce? How do you differentiate with the other PCs?
So I think the secret sauce is the experience, and the only way to get experience is through the years, right? When I started in Ignea, I had some hair, not anymore. So and we have the advantage that we are 4 partners at Ignea. right? So the combined experience of the four of us, plus the network and the connections that we have, is what we bring to the table when we participate in boards of the companies that we invest in. So the way we say we can add value is to decrease the bottlenecks and to diminish the obstacles that the companies have in order to grow, right? So the way I like to represent that on how we can add value, one of the most successful companies that we invested in is a company out from Israel. It's called Rapid, with a Y and D at the end. It's a fintech company, and we invested into their Series A, and they had zero presence in Latin America, and we are the only Latin American investor into that company. So as of today, or last year for 2023, the company sold $500 million. So it has grown significantly, and now 20% of their sales comes from Latin America, mainly from Mexico and Brazil, right? So we help them to open doors mainly in Mexico in order to deploy their business here. So that's the secret sauce at the end of the day. It's not something really secret. It's just to understand the needs of the companies and do our best in order to break the bottlenecks, in order for the companies to grow, make introductions, help them with the regulations in the country when we're talking about fintech for international companies. So that's no big secret, just to allocate the time from the partners when it's needed, participate in the boards as much as we can, and really have a trust relationship with entrepreneurs when they can tell you the good things, but most importantly, tell you the bad things so we can be able to help them.
Thank you.
Sure.
Thank you, Otto. Thanks, Oscar. Next question up. Do we have someone from the audience with a question?
There's Rob raising his hand.
All right, go ahead.
Yeah, hi, thanks, Otto. Which verticals or industries do you like the most for investing?
So it will depend on the timing. I mean, when we started investing in 2016, our second fund, you didn't see that much the word fintech in our prospectus, and we ended up investing 50% of our fund into fintech, right? So we like to ride the waves on what is hot in the moment and what is also promising at the moment, right? So in this case, if you saw our prospectus of the 2022 fund, you probably wouldn't see AI, for example, and we're pretty excited about AI right now, and who isn't, right? So aside from the hot names from fintech and AI, we really are looking forward to invest in B2B SaaS type of opportunities. So to take advantage of nearshoring, for example, the amount of investment is going to come into Mexico, but just the needs that these type of companies have regarding payments, regarding ERPs, regarding recruiting, et cetera, all the systems that they need in order to receive the amounts of investments that we are expecting. I think there's a huge opportunity in B2B SaaS in Mexico specifically. So we're particularly excited regarding that. And when you combine B2B SaaS with a touch of AI, then you get a bingo. So we're really, really excited about that.
Thank you.
Thank you, Otto. Thank you, Rob. Great. Okay, so coming up next, I would like to welcome Juan Pablo Marici from New Ventures Capital. Juan Pablo, you ready?
Hi, Francisco. Hi, everyone. Yeah, I'm ready. Well, give me
Great.
1 second.
Sure.
I'm in the office and there's a lot of noise outside. Can I share my screen?
No yet.
We can't see it yet.
No, you can see it.
There you go.
Well, hi everyone. I'm Pablo Marici. I'm Senior Investment Analyst at UG Capital. And New Venture Capital is a fund that is empowering the youth in Colombia, Ecuador, and Latin America. It's an early stage impact ventures. And who we are, New Ventures Capital is part of New Ventures Group. New Ventures Group is a 20-year, also in this year is our 20th anniversary. And New Ventures is a platform that has support impact ventures from social and environmental issues. So New Ventures Capital is investment part of this year. And so just talking about more ventures, is the biggest organization in Latin America for impact. We have the acceleration part that we accelerate more than 100 companies every year. Also, we have presence in more than 4 countries. Currently, we have presence in Argentina, Ecuador, Colombia, and Mexico. Also, we got the ecosystem building. I don't know if some of you know the PLI is the Pro Latinoamericano Inversión de Impacto. It's the biggest impact investor forum in the Latin America, and also I have to say in the world. And we got the innovative finance part where we had Adobe Capital, which we have the spin-off in 2021, and then we have the Iguala, that is a kind of a financial entity that provides loans to small and medium companies in Mexico. And I'm talking about more New Capital, just to be about our thesis. Well, we bridge the supply and demand by providing strategic capital to companies that are tackling most of the pressing issues about social and environmental in Latin America. And we have only one LP, that is a Podnar Foundation. They provide us 20 million to invest in tech-based companies from pre-seed to Series A startups, sorry, in Colombia, Ecuador, and Latam. And the objective for us is to create better living conditions and welfare in urban areas for people. We provide smart capital. As I said, we have a very expensive, a very strong regional network by all the infrastructure from New Ventures in the whole Latin America and of course in other countries. So this is very fast the team. Rodrigo Villar is the managing partner, Daniela Pacheco is the managing partner, myself and Miguel and Mateo are part of the operational team. And also we got Armando Laguardo and Sebastian, who are part of the team, more in a strategic part. Armando is the head of the acceleration and Sebastian of the impact of the group. Some of our track record, we had, well, in this slide, there are only 6 ventures. Now we have 10. We have to take this slide, but we have some investments in fintech, edtech, HR tech, and health tech. And currently we have also in climate tech and more in fintech. We have deployed 1.7 million and well, I'm going to be more fast. The post management, we focus, of course, in 4 pillars. The first one is the impact. We like the companies to measure and to communicate their impact. Also, we focus in their next round financing by connecting with some impact investors, but also institutional investors from other VCs in Latin America. High-level connections. We have, as I mentioned, we have presence in different countries in Latin America, so we provide these high-level connections in different countries. We help some companies to do the soft landing in different countries, but mainly in Ecuador, Colombia, and Mexico. And also, we build the community and leadership. Some of the activities of our fund, I told the objective that is to help the youth people in Latin America. Also, we invest in early companies from pre-seed to Series A. In sectors, I have to say that we are kind of agnostic, but we have our tier 1 of industries are fintech, edtech, HR tech, health tech, and climate tech. But if we see some opportunities that we can connect with the impact of the youth in Latin America, we can consider it that company. And our tickets are around 150K to 350K. And also we have the 50% of the funds to follow-ons. Follow-ons around 500K And our main instrument is equity and save. I have to say, all of our investments are in saves. And finally, New Capital is launching and fundraising a new fund that is called Empower Impact Capital. It's the first fund for women's health in Latin America. Our target is to impact 2.6 million women in Latin America by 2030. We are
Juan Pablo.
And finally, just to close this part, this fund is targeting more growth companies from Series A, Series B, with an instrument of structured exits, mainly venture debt and regulatory financing. And this is for the whole Latin America. And well, some of the characteristics of it. Sorry. And thank you, everyone. So this is huge.
Thank you very much, Juan Pablo. Great. So now over to questions. Do we have any questions from the audience? No hands raised. Okay. Marco, Oscar from the panel, can you guys help us out?
Yes, thank you for your presentation, Juan Pablo. It was very interesting. What interests me to raise a question is that we are actually a startup with social impact and social programs with the IDB Lab and other partners in such journey. But what we have found with many VCs is that normally that agenda is not interesting for them. It's like, tell me about your multiples, tell me about your traction. When we start talking about what we do with closing gaps in social equality or opportunities, it's like fast forward it and tell me your business or unit economics. So
show me the money.
Show me your money. So my question to you, Juan Pablo, is have you found that in your thesis? Like, did you decide on that thesis because of the fund? I don't know if you have people who back the funds, particularly for impact, or how do you get that specialization on funding impact startups?
Thank you, Marco, for your question. And that's the question, actually, for the VC money and the impact world. Well, the first one I have to say that Human Capital have a good multiples. We have multiples. We have 2.6 from 2023. Well, in the recent months, and I have in the recent year, we have seen some startups that are really interesting because they have both worlds, and this is, and I have to say that New Capital is not pure impact. So we validate the impact, but we are not only focusing on the impact, but also in the economic part. So for us, very important when we evaluate a company that they can be a unicorn or we can return the fund in every company, but also we check the impact. And this is what we have seen is that we reduce like the spectrum of the opportunities, but we have seen that they are opportunities. And something that I have seen in the recent year, literally in the last 12 months mainly, is that funds very renowned in Latin America, they have included policies also because they're all LPs, all the VC money in Latin America comes from very few institutional entities. And these entities are looking for more for companies that have some impact in their thesis. So all the ecosystem now has some they are looking for some companies with impact, mainly in climate tech. I have to say the climate tech is the industry that has more money right now, but also from the social part, they are looking for companies with money, and the VCs are moving to that part and to include in their analysis. Currently, most of the VCs have the ESG part in their analysis, and for me, in 5 or 10 years, the impact companies and the normal companies are going to be the same, because all the work is transitioning to these companies with some impact. And I have to say that we are not investing in recommendations in our companies with very traditional models that don't scale in a very fast pace. We are investing in companies with safe pace and with a very fast growth. So that's my answer. I don't know if I...
Thank you,
Thank you.
Juan Pablo. So we have time for one quick question. Rob, go ahead.
Yeah, thank you. Are there any special characteristics that you identify for a founder that you find enticing, so that you are willing to invest in that founder? I mean.
Yeah, thank you, Rob. Well, for us, very important that they are mission driven, and we evaluate that they are mission driven, but also impact driven. And if you see our portfolio, we have companies that they have like direct impact, but when we talk to these entrepreneurs, they always say that I want to change the world, I want to change this industry, and for us, it's the most value part when we evaluate entrepreneurs, the ambition to really transform and change the status quo that we got. So.
Thank you, Juan Pablo. Thank you, Roberto.
Thank you.
Great. So that was New Ventures Capital. And up next, we have Enrique Zambrano, who is managing partner of Proesa Ventures. Welcome, Enrique.
Thank you, Francisco. Nice to be here. Let me share presentation. Give me 1 second. I shouldn't be seeing that. Okay, so let me talk about Proesa Ventures. Proesa Ventures, we're a mobility-focused fund based out of Monterrey, Mexico, and Houston, Texas. Mobility, we mean ground transportation, so nothing that flies or floats. And we invest across the whole value chain. So from industrial technologies to smart components to new vehicles themselves, mobility as a service companies, and what we like to call detailed data services, which I'll touch a little bit upon that. We like to call ourselves the largest LATAM-based VC focus on mobility. And important to mention that we have one LP, which is the Proesa Group. We were born out of Proesa because we were seeing the need for Metalsa to evolve, and Metalsa is one of our operating companies. They manufacture structural components, and we were seeing the automotive space moving really quickly. And the idea of Proesa Ventures was to get ahead of the curve and invest on new technologies and new business models that could eventually the group adapt. With time, I think we've been either differing a little bit, and you can say Proesa Ventures is more as a traditional VC with one LP structure than a corporate venture capital. And I mean, we are committed to invest in both teams, reshaping mobility and making it much more sustainable, efficient, safe, and democratized. I'll skip this. And I mean, this is kind of the strategy I was talking about. Don't want to go too much into detail on this. Just want to say that what we call detailed data services is our services around mobility. So this is pretty broad, and things like fintech, insurtech, mobility related marketplaces, EV charging infrastructure, and so forth. I mean, this is I would say 50% of the deals or the opportunities we're seeing are in this space, 40 to 50%. But we usually invest in early stage companies, mostly seed series. And we're pretty flexible in investing B2B to B2C companies. Although with time, we've been focusing on B2B SaaS companies. And our average ticket size is $1.5 million. And we're pretty flexible in a way of being a lead investor, co-lead, or investing in a syndicate, being a follower. And what truly set us apart is our mobility focus and our expertise in that area. And this is something important to note. We launched in 2019, and our first investment was in 2020. So we have had more than 5 years of 100% focus building this expertise and network, which is what matters. We have invested with the most renowned mobility VC funds out there, like Autotech and Maniv Mobility, as well as other companies, other funds like Ignea here with Otto, as well as NEA and General Catalyst. Also, and I think related to this, we have developed a very strong network and partner, which we can also leverage from Proesa and Metalsa. And with time, we've been building what we like to call the Proesa Ventures platform. And as I noted, a lot of our companies are focused on the B2B markets. So we're trying to support them on their growth strategy as well as their sales teams, with building out the sales teams and their playbook. When we invest, usually the companies are small, are already proving out they have a product market fit, but are ready to scale, and that's where we support them. And I would say in two specific areas. On one side are more consulting projects when we help them develop the strategy to enter a new market, evaluate that new market, and so forth. On the other side is about connecting them to the right people to help them develop a better B2B playbook, sales playbook, as well as helping them structure their sales teams. And well, with our background in Proesa, we obviously bring on a really high rigor on the corporate governance side. There's a lot of experience here although startups are a little bit different than corporates, there's a strong knowledge base we can bring here and support. I believe we're in more than 70% of the startups we have invested, which we have invested in 23. We participate as in the boards.
One more minute.
And I think lastly, what I wanted to mention, we work really close with startups by having a chat group with them, monthly meetings, and just helping them out in building out, making intros to potential customers, other investors, also supporting in recruiting. We have interviewed high-profile candidates for these startups. And just to finish off, as I mentioned, we have invested in 23 companies. 60% are in the US and Canada, and 20% Latam and Mexico, and another 20% in Europe. Where are the areas where we invest? Europe and Israel. And thank you.
Thank you, Enrique. That was great. Do we have any questions from the audience? Okay, I'm gonna turn it over to, okay, Roberto, you have, I see you have one question. Yeah, please go ahead.
Hi, Enrique.
Hi,
have you invested? I know you were in the auto industry. Have you invested in any AI company, AI based company?
Yes. The last two investments have been AI related. So one is Ritmos, which is in the intersection between mobility and energy. So they're helping utilities optimize their network. Well, first of all, visualize where there are CVs and optimize their network as the grid is not, let's say, reliable enough or to keep up with the energy demands, current energy demands. And the other company we actually closed yesterday. It's called Pool Systems, based out of the Bay Area, and they're doing this AI platform to support OEMs to be able to, and I'll try to explain this as best as I can, but to support to be able to predict or to find patterns in the data from current vehicles that are on the streets to see if they could potentially have issues down the road, quality issues, and so they can be proactive and fix them. A lot of this, they're focusing on the energy management systems of vehicles, mostly on the battery and the electrical powertrain. And a lot of these issues are software based, so they could potentially send a patch to fix them.
Thank you.
Great.
You're welcome.
Thank you. Do we have another question from the audience? How about the panel?
Sure.
Great. Go ahead, Marco.
Thank you. Thank you, Enrique. It's really a privilege to see how Monterrey has been the example of CVC, corporate venture capital, I don't think only in Mexico, I think in Latin America. You have here FEMSA Ventures. Well, even though CEMEX Ventures is based in Madrid, actually our corporate is based here in Monterrey. But my question is, I'm giving you an example of my startup. We started, I believe, on the opposite side. We started funding our company with corporate venture capitals because we were doing business with them. We had investors like CEMEX Ventures, Whirlpool Corporation, and other companies. So we have found that the deals are mixed with sales because you do business with some of those corporates. So sometimes it gets complicated to explain to pure venture capital funds what the deals are about. And my question to you is, do you anticipate those kind of deals for later stages of the startups, or do you focus more on how the collaboration between Proesa and this ecosystem startups can survive together?
Yes. So Marco, yeah, no, thank you for your comments and question. On our side, when we launched Proesa Ventures, before launching, we studied a few examples of other CVCs, and we got to the conclusion that the best approach was working as a traditional VC. So we're financially focused when we do an investment. Do we think this is a good investment or not? And secondary, there's they can work together with Proesa, right? If there's a collaboration opportunity, a partnership involved. So that helps us focus on actually providing value to the startup and focusing on making the startup successful, much more than the partnership of Proesa or Metalsa with these startups. Just as an example, for example, Exos Trucks, it was our first investment. It's now a public company. They do electric trucks. They came through Metalsa. And Metalsa was working on them, of building frames for them. And just last year, the company decided, we need to find a cheaper alternative because the logistics costs of sending it to Mexico, to Memphis were expensive. And they changed suppliers. And so we supported them through this transition.
Thank you very much. That's a great example.
Thank you, Enrique. Thank you, Marco. Great. So continuing in this corporate VC part of the session, I would like to introduce Fernanda del Bosque from the FEMSA Ventures team. Welcome, Fernanda.
Thank you, Paco. Jerry, hello, everybody. Happy to be here. Thanks, Powertrain Ventures, for inviting me today. I'll begin by presenting myself. My name is Fernanda del Bosque. This is my third year as an analyst in FEMSA Ventures investment teams. And now I'll start by giving a little context about FEMSA as a company. So we're listed in the New York and Mexico stock market. And basically, we are three big business units. We have our famous retail division. We own all the OXXOs out there, more than 24,000 convenience stores. We're all over Latin America and recently bought a company in Europe called Valora. We also own pharmacy chains and gas stations. And then we have our Coca-Cola's division. So we're Coca-Cola's largest bottler in terms of volume. And finally, we are also the largest neobank in Mexico. So we're building a powerful value-added financial ecosystem, leveraging the OXXO footprint and also our existing bottling network. We also have some B2B operations in the US, but we're currently in a transition period where we're about to sell some of these assets, and we'll be starting focusing on expanding our store footprint and also our fintech capabilities. So now jumping on FEMSA Ventures, we're FEMSA's corporate VC fund. So FEMSA Ventures started about 6 years ago. We wanted to build a two-way highway that connected the entrepreneurial ecosystem with our organization. So from one side, how can we help them using the business platforms that FEMSA already has? And also the other way around. So what are the entrepreneurs offering us in terms of innovation and technology? And what can we learn from them and bring that to the table? So we have two strategies. We do direct investments and we're also fund of funds. We launched our first fund in 2018, which is a $50 million fund. We've invested in 15 companies and 6 different funds. So we began with our fund of funds strategy because we wanted to learn from the best. And then we started investing in direct in startups. Right now, we're on our second fund, which is doubles the size of the first fund, 100 million. And currently, we've invested in 6 different companies and 8 different funds. And deep diving a little bit in our thesis, we do seed and Series A and follow-ons on Series B and Series C. We focus primarily on the industries that are related to FEMSA's core businesses. So fintech, retail, and logistics supply chain. We also see some of health tech, maybe food tech, but basically the first 3 verticals. Our tickets range from 500K to 5 million. Our sweet spot is between 1.5 and 2 million. We look for a minimum ownership of 10%. And now that we have experience and feel more comfortable in our second fund, we also lead rounds. So now regarding our fund of funds strategy, our ticket size goes from 500K to 1.5 million. We have invested in micro VCs like Bridge Latam, all the way to Riverwood and everything in between. And besides investments, we also have a platform team that was launched in 2022 with the purpose of looking for potential collaborations between startups and our BUs, regardless if there was an investment or not. So adding value not necessarily ends in like business development, you know? So we also leverage the know-how and expertise that's been accumulating along these years within FEMSA, connecting startups to the right people within our organization, or building seminars, or etc. You name it. So yeah, basically that's FEMSA Ventures. I'll leave the rest of the time. That's, I think, I'm quite short, but I'll leave the rest of the time for some Q&A. Happy to answer your questions if you have any.
Thank you, Fernanda.
I do.
Great. So, okay, first question. Go ahead.
I go or the
Yeah.
audience first?
Yeah.
Go ahead, Marco.
Okay. Someone
Okay.
else?
Yes.
Go ahead, Marco.
Thank you for, it was great to know how fast has FEMSA Ventures grown over these years. We have been very close watching all these VCs, CVCs around us. And I was telling Enrique, we are funded only by CVCs at the moment. And my question to you is, from what we have seen in other corporate venture capital, how do you identify the pain points on your ecosystem so startups can go look not only to FEMSA Ventures or maybe to the business or functional areas of FEMSA in order to identify potential collaborations? How do you identify those pain points? Or do you have them already?
I guess because we have FEMSA backing us up, like everybody, or maybe I'm sounding kind of like braggy or whatever, but having FEMSA backing us up, like everybody wants to talk with us because they believe I'll be connecting the startup with the right person in OXXO and they'll be signing the NDA tomorrow. And that's completely false, you know? So I think that's from one side, where we also generally ask them, like, we ask the startups, how do you see us, like, providing this value to you? Because it's very easy for them, like, it's very easy for us to say, like, how can we provide value? But we also want startups to do their homework and come with us and tell us how can we provide value to them. So we sometimes like change that question to them, and if they know like what do we really do and how can we really provide value, they'll generally like know what to answer, but sometimes they don't. So they say like, yeah, I'll come back to you or whatever. So I'll see that like from one side, like having the name backing us up, you know, the logo. I think that's what comes up like right to my mind right now. I don't know if I answered the question.
Yeah, kind of. I was thinking more if you have mapped all the pain points that your ecosystem has, and maybe you're filling those gaps with your pitches and your startups that are normally or currently in your pipeline. But yes, kind of, I got it. And thank you very much for your answer, Fer.
You're welcome, Marco.
Great. So Eduardo, we have another question. Go ahead, Eduardo.
Thank you, Paco. Fer, really nice to meet you. I just want to say a brief comment. I think I have some of those questions or answers, no? How I see FEMSA could be a potential strategic collaborator or even an investor with our proposal to transform cross-border mobility. So really looking forward for that. I already applied for or submit my information to your website and really looking forward to further communications, Fernanda. Thank you so much.
Thank you. I'll have your name in mind. Thank you, Eduardo.
Great. So do we have one last question from the audience?
Yes.
All right. Hey, Eduardo.
Hello, Francisco. Hey, Fernanda. I'm from Integra. We're a fruits and vegetable platform. We connect directly supermarket with producers. And regarding the technical co-founder, we have reach a point where the VCs asked us for a technical co-founder. My expertise domain is producers, it's logistics, it's transportation, but we lack the technical co-founders. How do you approach, or what's your thesis about technical co-founders? Thank you.
Okay, so I would say we just want to make sure that you really have built the technology in-house, that you're not like, I don't know, building something from ChatGPT or something, if whatever, maybe logistics doesn't make sense. Like right now. But yeah, if you're not like building it like on top of something already, so we just want to make sure that the technology is built in-house. If you really understand the product, because like it's kind of obvious, if you don't have like that much, or a CTO or whatever, we don't have any kind, like not even close of the technology know-how. Like you'll give me like tres vueltas, no? So like we will only want to make sure that you really understand your product, that from one side, and we will also double check with us technical guy, with whomever we know, or a CTO somewhere else, a CTO from one of our portcos. Well, like we'll do our homework, because we are not like a tech experts, you know. But of course, if your company is like tech based, you have to have like a profound tech expertise also, you know? So we'll be looking at that. Maybe, like, I don't care if you don't have the CTO name, but maybe a head of tech, the head of product, something regarding technology, if your product consists in technology, you know?
Okay, thank you.
Thank you, Eduardo. Thank you, Fer. That was great. We really appreciate you taking part in this session today. And up next, we have a new category. You know, we saw some seed-focused VCs, some on the, you know, early growth stage, venture stage. We went over a couple of corporate VCs, and today we are very happy to have a new category of funding, non-equity funding. This is corporate, I'm sorry, venture debt category, and I'm happy to invite over to the call Luis Gomez from BBVA.
Thank you, Francisco.
Welcome, Luis. Go ahead.
Thank you. So, hi, everyone. Luis Gomez from BBVA Spark. Thank you all for being here. Thank you for the time and space. So maybe many of you already know what BBVA Spark is, but BBVA Spark is a bank within a bank. So we are a small bank that serves startups. That is our mandate. And we have not only the venture debt, we also have financial services embedded into the play of Spark. And most of the time, what we've found that where we add the most value to our customers is on the transactional part, because as you know, in Latin America, and it's the case in Mexico, it's very difficult to open an account, to have an executive with you that can guide you through the process, the collection of products, a hedge, an exchange rate, and things like that. Definitely open to, if you are interested in checking out that part. But today we're going to talk about that part, and maybe different from the equity investors that we have here. We provide that, which means a lower, which means either zero dilution or a very small dilution, and that's my pitch. So, what type of debt do we do? It's accurate to say that we do venture debt, which means we lend money for companies to grow, to spend in SG&A, in working capital, and things like that. But mostly what we do is we normally lend money to companies to keep growing their main assets. By that, what do I mean? For a fintech, that would be the loan portfolio. For a software company, that would be hiring more programmers, and many other examples, right? We do it asset backed, and we normally require a warrant for the money that we are lending, right? It's a very different play from equity, but the way that you should understand BBVA's Spark playing here is in tandem with the equity. So we see that venture debt or debt as a complement on the equity raise. So please do not understand it as a something that it's a substitute, because normally what happens is that companies come to us thinking it is a substitute, and it doesn't work out, because the way we think about it is we need to go hand in hand with the equity so that we both together can enhance the company. We like to see some equity investors in the cap tables. That's one of the things that we look at. But we have a couple of metrics that you can imagine, since that is a little bit different from equity, that we look at. And then maybe let me talk a little bit about them, which is we see the main thing for us, the idea has to make sense in an economic way, which means that your unit economics have to make sense. We're not expecting you to be profitable, not even in the medium term. We understand that these may be on the long run. That's fine. But on the unit economy has to make sense. And also we look at the market, how big the market is, because it is very important to us to understand whether the company can expand into a big market, which means that the probability of being successful is much higher. We also look at the financials, and in the end, what we do is we mix everything together into a financial view, but the financial view means that we need to estimate the probability of you raising additional capital. And our debt adds, I don't know, X amount of runway in months. And then with our debt, with the equity just raised, and with the characteristics of the company, we basically go ahead and estimate this probability and then make a decision on whether we should lend the money or not. Here, we as BBA Spark are located in LATAM. We do Mexico, Colombia, Chile, Argentina, but we also do Spain. And as you can imagine, being a Mexican bank, we need to be very related to the US. So we do also some loans in the US whenever that makes sense. The beautiful thing about doing this in BBVA is that we are a big bank, so we can do peso, dollar, euros, fixed rate, variable rate, balloons, bullets, whenever it makes sense, longer terms. It depends. It really depends on the business model. The way we approach this is more cater to what the business model requires, more than what we think we need for the debt facility to make sense, right?
Great, Luis. Thank you. You still have a minute left, but now the questions are piling up. Okay, so Eduardo, please go ahead with the first question for Luis.
Thank you, Paco. Luis, thank you so much for sharing that insights. Definitely sounds very interesting. I just want to understand which is the typical or your sweet spot on ratio of between the warrant that you require and the loan that you provide.
That depends a lot on, you can imagine, the level of guarantees, the type of guarantee, the type of company, industry, the leverage, many things, right? I'm going to give you more or less a range from prior experiences, more or less comps. So normally what we do is TIIE plus something or software plus something. And that something is something in between 5 to 10%. As you can imagine, companies that are younger tend to be in the higher range, and companies that are more mature or have assets that are easier to collect back in case of bankruptcy, they tend to be on the lower side of it. On the warrant, we go from nothing of warrant to 2% of warrant, more or less, give or take, and depends on the post-money valuation, obviously, and what we normally do is something in between 0 and 1. We understand that this is dead. We go first, and that's why we cannot go out and ask you for more.
Awesome. Thank you. Very interesting. And do you have any particular range of loan sizes, or you are open with that?
We are very open. Our sweet spot normally is in between $10 million and $13 million, something around it. That's where most of our deals fall. But we can do from something to $100,000 to $20 million. And for us to go beyond the $20 million, it is possible, but it requires special authorizations, which take a lot of time. And then basically, we normally say, let's start with 10, 15, 20, something like it. And then we can build the relationship and go for something bigger later in time.
Awesome. Thank you so much. Do you have any contact information?
Yes, of course. Let me write it down in a moment.
Thank you.
Great. Thank you, Eduardo. Thank you, Luis. I have another question here from the audience. Roberto, please go ahead.
Yeah, well, one of the questions was like the interest rate. That I believe that question has been already answered. But also, which kind of companies do you like most in this? Well, it's a loan. It's not an investment, right?
Yeah. I mean, I like to ask as a personal way, but I'm not gonna ask as an institutional way. So we like every single company. We do fintechs, proptechs, SaaS, food tech, agriculture tech, many things. We are industry agnostic, and that's important to know. The thing that we look into really is that this idea that you come to us with makes sense. That's what we're looking for. If it makes sense, you basically have halfway through.
Okay, thank you.
Thank you, Rob. Thank you, Luis. So that was great. Really excited to see new financing options that are, popping up, and particularly from established players. And so we're very happy to have you here and to be able to share with the audience what you guys are offering. Now we're running a few minutes late on time, but we do have prepared a panel for these next 20 minutes so that we can wrap up by 7. And so I would like to ask for all of the investors who took part pitching today. We have a couple of them who have said they would be able to stay for the rest of the session for these short questions. And so anyone who still wants to participate from the people who pitched today, you can still stay on. But for now, I have Ivan Montoya. Ivan, you're still there?
Yes, I'm here.
Great, Ivan. And I also have Otto Graf. Otto, are you still with us? Great.
Yes.
All right. Anyone else who would also like to take part in this last section of the call from the people who pitched today? Okay. Great. So Ivan and Otto. So it's been said, many times whenever you're talking with an investor and you want to understand a bit more what their reasoning is behind an investment decision, and one of the common ways in which people can ask this type of question is, who do you bet on? You bet on the jockey or you bet on the horse, right? So let's do a lightning round. Let's just come up with quick answers for these first 3 questions, and then we'll dive deeper into some of the rationale behind your answers, right? So,
Okay.
Otto, what's your view on this?
Jockey 100%.
Jockey 100%. Ivan?
Both.
Both. Great. All
I will
right.
not just invest in the jockey.
Now, the second question is a play on the first. It's just another way to put it, but it's another analogy that, you know, when people have tried to predict if, you know, it's the industry, it's the team, is it the product, what is it that makes the greatest predictor of success for a startup? And some studies, you know, doing back analysis have found that it's the timing. So I'll put the same question under a new light. Who do you bet on, the surfer or the wave?
Wow,
that's a good one. Then you can start, Ivan, so I can answer both.
That's a hard one. I don't know how to answer that one. If I had to pick, I'd have, I don't know. That's a tough one. If I had to pick, I would pick surfer. Maybe mainly because I'm not sure I can pick the wave, but who knows? That's a hard one. I'm not sure I'd know how to answer that question.
Thank you, Ivan.
Yeah, it's hard to define how high the wave is, but I have to say it's really difficult to have a great return without having the wave in your favor. So, but that's only in hindsight, right? So you said it should be short. So I have to say the wave, and then we can double click on why. But I'll go with the wave.
Nice.
Thank you, Otto. So sure, those are very, very philosophical questions. If, you know, we turn it into something more practical, whenever you have people coming into your office pitching their startups, what would be, you know, the single indicator or KPI that you would try to focus on to understand and gauge whether you would bet on this startup?
So it's no simple answer, but I'd say unit economics. So unit economics are super important. They were less important back in the bubble, and now they're super important again. But I'll say if it's a great founder with a potentially good product, but the unit economics don't work, there's something that we're not going to invest.
Great.
Yeah, I think it depends at what stage we're talking about. If it's a pre-launch company versus they've just launched or they've been around for 2 or 3 years. So my answer will depend very much on where they're at. But just for argument's sake, just to make this fun, if they've been live for a little bit, then I'm looking for early signs of product market fit. So if it's a consumer-oriented service, do they have viral organic growth, like zero marketing spend, but traction off the charts? If they're a B2B company, is there some indication that the engagement is super high? Their salespeople are hitting quota, not just the top salesperson, right? So it just depends, but depends where you're at.
Thank you, Ivan. Great. So now let's turn it over to the next part of the Q&A. So now we're gonna, you know, talk about overrated and underrated trends and technologies. So in your view, which is the most overrated trend or technology currently? Overrated.
All right, I'll be controversial. I don't know if it's controversial or I have only made one investment in anything that has to do with crypto. And that to me felt like it was a technology looking for a solution. And so the one investment I did was because the use case made a lot of sense to me. So I don't know if that's consensus now or it's still contrarian, but at the time when it was peaking, I was like, I don't get it.
Time will tell.
Definitely. We had several flavors of the month, the flavors of the year. Crypto was one of them, and then after crypto came the NFTs, and after the NFTs came DeFi, and then everything went away, and now crypto's coming back. So we are true believers of the technology behind the blockchain. So we don't even want to define the companies that we invest in as crypto related, but as blockchain related, and we have made investments in that because we do believe in the technology. But then again, we stopped making investments in crypto related companies in 2022 and 2023 just because we didn't know what was going to happen in the market. And then you go back to your investors and said, well, this company looked really promising, and I made this investment in a crypto related company, a blockchain company related in 2022 after the FTX debacle, and then your investors will tell you, what the hell were you thinking, right? So you need to also go with the wave and the surfers in order to do those type of investments. And then it could be also controversial because I mentioned that we're really excited about AI, but then there are almost every single pitch that we get now is that we do AI for X, Y, and Z, right? So you really need to know what they're talking about and really see if AI is another flavor of the month in some companies that are forcing just to mention that they have AI into something, right? So that is definitely the flavor of the month right now. Again, we're excited about it, but then we see a lot of stuff that just says we do AI for X and Y, and it's BS.
Right. Absolutely. Just slapping a sticker on top of whatever they had. You know, it might be true, right? In the sense that they can connect to some type of AI service or API, but really, you know, to have a comprehensive solution to a specific problem, you know, is tough. And also to have proprietary, you know, IP that you can build a business off of is also a true challenge. So, so that the, you know, complementary question is, what trend or technology is underrated right now and you believe we should be paying more attention to?
Well, I'll throw one out. I think that lending businesses, for a lot of VCs, people are like, oh, I would not invest in a lending business. I still think there's huge opportunity in providing better access to capital to people, particularly in Latin America.
Yeah, I agree with that 100%. I was going to say consumer finance, and consumer finance obviously includes lending, and lending applies not only for consumers, but also to SMEs. There's a huge need in Mexico and Latin America. So we have space for 6 or 7 unicorns that are catering for consumer lending or SME lending in Mexico. So we have Confio now, but there's space for several more Confios in the country. But not only lending, so everything related to consumer finance right now, it's really hard to fundraise. And there were some companies that were not good and raised a lot of money. And then there are companies that are good and are not able to raise money right now. So it's a really tough environment for those type of companies to be fundraising right now.
Great. So I'd like to make one, you know, last question to the panelists. And before, you know, we open it up to the audience members for maybe one last question. So my question to you guys is, you know, which are the top 1, 2, or even 3 traits that founders have, which, you know, you believe are great predictors of success? What are the traits that you guys are looking for that you've seen great founders have and are looking for more founders like them?
Do you want to start, Otto?
Sure. I would say some that it's not going to be a surprise. So they have to be passionate. They have to be knowledgeable. But everyone can say that. It's difficult to say no to that. So an important trait for us is entrepreneurs or founders that have the capacity to what we call captivate an audience. So that means that they need to be good fundraisers. We have backed entrepreneurs that are really good at what they do, really technical, very passionate, very knowledgeable, but are not that good, not that good at fundraising, right? And that's really, really tough. So one of the things that we need to help our founders in order to succeed is to help them out with fundraising and doing intros, et cetera, et cetera. But at the end of the day, they are at the driving seat for fundraising. So if they do not have a good trade regarding an ability to fundraise, and you do that by captivating an audience, it's most probably that the company is not going to turn into a billion-dollar company. So we really try to focus on that, on the way they sell themselves, the way they sell their product, in order to get to the next round and the next round and the next round. So there are some entrepreneurs that do not have really good products and are very good at fundraising, but when you get the ability to have the two of them, then you got I don't know why that happened. Then you get a really good, exactly. You get a really good combination.
You had the party.
Exactly.
So I think there are a lot of kind of models that can work. I mean, you got everything from Elon Musk, who's probably one extreme, to people who are very different, right? But the combination I like to oftentimes I back is founders that have three attributes. One is humility combined with competitiveness. And oftentimes what I find is those two attributes are really associated with the growth mindset. It's somebody who's always wanting to get better. Someone who doesn't feel like I know more than you, or I know it all, right? It's kind of, sometimes people talk about, they like to back learn-it-alls, not know-it-alls. And oftentimes you have this calmness combined with a competitiveness. Like you start talking about the alternatives and they fire up and like, oh, we're going to crush them this way, that way. I was like, whoa, where did that come from, right? And then I would agree with Otto. I would kind of frame it more broadly, but I think he did it very specifically. But it's the ability to sell. They have to sell, because they're going to be, if you're investing super early, they got to sell people to join the company when they have nothing. If they're raising capital, they got to get people to join when it's like nobody else is going to join, right? And I think the story I shared earlier about Myron Sandoval, the founder of One Car Now, I don't think I mentioned he was 20 years old when I met him, and I remember thinking, oh my God, what's going to happen with this company, right? But after working with him for 3 months, I was like, holy shit, this guy's incredible. And he's going to announce an $86 million of fundraising, and he's just 22 right now. And so it doesn't necessarily mean you have to have all the expertise and so on, but you have to have an ability to sell. And he does.
Absolutely. Absolutely. That's a great case. So I like to turn it over to the audience for just one last round of questions. Who like to take part in the last round of questions? I see a bunch of people still in the call.
Maybe me.
Great, Roberto. Happy to have you closing this part of the call. Go ahead.
Yeah, sorry for the monopoly of questions, but what do you see as a turnoff? If everything looks perfect, but one thing fails, as in founders' idea, market size, traction, what is a turnoff for you? What makes you think that's not going to work?
I'm going to say two things. One, it's a major turnoff that I get referred to a founder from a banker or a consultant that was hired by the founders in order to fundraise. That's a major turnoff. We've never made an investment that comes through a banker in early stage or a little bit later stage. The second is entrepreneurs that don't know their numbers, that they need the CFO to answer the questions regarding numbers. That's a major turnoff for us as well. So we want the CEO of the company to be really knowledgeable with the numbers, with the industry, et cetera. When they're making a pitch and then they refer the questions to the CFO for them to answer, it's a major turnoff for me.
Yeah.
Great.
Perfect. Thank you.
Great.
Yeah.
Ivan, how about you?
Yeah, I mean, it's hard to imagine a case where everything was perfect, but there was one thing that turned me off. But what I would say, because it wouldn't have been perfect, right? But just to play along with this scenario, I struggle sometimes with founders who can't synthesize, right? Where you know, and this is an archetype, right? So there are some founders who are like the idea people, constantly, and to some degree, you need to have that, right? Because you're confronting challenges every day, and how do we solve it, and can do. And sometimes I've seen teams that complement each other, where there's an idea person and then another person who says, hey, how are we going to actually get it done, right? So I think that can happen, but I'm most intrigued by founders who can communicate their business in a very simple way. And when I ask a question, how's it going? It's not 3 minutes of discussion. It's like, it's going well. We're running into challenges. Here are the 3 things. Boom. Right. So the opposite is, I guess, a turnoff.
Okay. Thank you.
There's another question from Guillermo before you close, Francisco.
Guillermo Jackson. Great. So let's keep it super brief. So we make it before 7. And so this is the very last question. Guillermo, welcome.
Thank you, Paco. Very interesting dynamic. I just wanted to ask, what do you think is the best approach that we should have with VCs and different funds? Is it a cold email, sending up a deck, joining in a conversation? What's your favorite way of approaching new ventures and new founders?
For us, the best way to go is to get a hot intro from somebody that knows somebody in a fund. We receive a lot of cold emails, and it's really, really difficult that we take it seriously, to be completely honest with you. We continue to receive that. We take a look at some of the decks that get filtered by the team. But if you want some of the partners to take a look at it, the way to go is a hot intro. So just figure out a way, and you can use LinkedIn for that. So who is related to who is related to who, to get a hot intro. Otherwise, it's going to be super difficult.
Yeah, I mean, I would agree that a referral is always better. At a minimum, it goes higher on your to-do list than, hey, I got 100 emails today, and now you're trying to prioritize, right? And that's, I think, the big challenge with cold. Plus, there's a little bit of maybe a quality check, right? Because the person referring it to you they're putting a little bit of their reputation on the line, right? So that makes you even more interested, right? But I have met with founders cold, right? So, but it's much more probably from the founder perspective, random, right? I had, a founder send me it was very targeted message. It was clearly in thesis, and they mentioned a metric or two that made me like step back. And so I responded to that one, very quickly. But I think the skill level has to be another level. You have had to done your research on the fund, the partner, what do they invest in, whatever, because at the same time, I get 1 million inbounds for things that I don't do, right? So.
Great. Well, thank you so much, Ivan. Thank you so much, Otto. Thank you for staying for the panel. I would like to thank everyone who pitched today. All of your pitches were super interesting. I would like to thank the audience who took part in raising some super interesting questions. We could go on for hours, but you know, let's cut it right now for today. And one last thing that I would like to invite you or ask you to do is if you could turn on your camera just for us to take a selfie, a screen selfie shot of all of the participants who joined the call today. If you could do that for me, I would really appreciate it. Great. So most of you, a couple still left. If great. So just wave hi. Thanks everyone. Thanks a lot for connecting today. We look forward to continue talking to you and looking for collaboration opportunities with you. Thanks a lot. Have a great evening.
Gracias.
Thanks, guys. See you soon.
Thank you, everyone.
Thank
Gracias a
you.
todos. Gusto
Bye.
conocerlos.
Thank you. It
Gracias,
was
hasta
quite
luego.
enlightening.
Muy buena, Paco.
Muchas gracias, Roberto. Qué fregón que te conectaste. Qué gusto saludarte.
Igual, gracias por la invitación.
Hasta luego.
Que estés muy bien. Nos
Tú
vemos.
también.